Hello, everybody. Welcome to Wednesday. The S&P 500 was up a little bit more than 1.1% today. Really surged on the news that they would be delaying the tariffs on automobiles with Canada and Mexico for a month. And so obviously, this is that ongoing, situation of trying to figure out what's going to happen with tariffs, which really isn't possible. So I do think we need to kind of step back for a minute. I'm getting clients that are writing, emails that are, worried about what's happening, rightfully so. However, if you put it into context, really not a time yet to worry. The news makes things seem worse than it is. It's just what they do. It's how it works. People are more interested in looking at negative things than positive. So, that's kind of how it works, unfortunately. But if you look, we had, 2 years ago, a 26% rate of return on the S&P 500. Last year, a 23% rate of return on the S&P 500. And so far this year, here we are, March 5th, and we are, a little bit less than 1% down so far this year. I would say, honestly, after two giant years like we just had, that you could have kind of a sideways motion, slightly down motion this year, or at least for the first part of this year. Really, no matter what was happening, no matter who was president, no matter who was in Congress, just on the basics of having a market that gets stretched out pretty far, because then the market needs to kind of sit around for a while, let the earnings kind of catch up so that the PE ratio doesn't get, really out of control. So, ironically, what's been happening here altogether, I still say is very healthy for the market as a whole, because we really don't want to have another, giant year that outstrips earnings, especially if earnings are going to be affected by some of the things that are happening here. So, just kind of take a deep breath and step back and take a look at it. I've got clients that are also coming in and asking to buy some different things, which I think is interesting also. So, there's a lot of dip buying going on. I think that's why the market is still kind of hanging up there. We drove the market back up into that kind of 5,800 to 6,100 range. We fell out of it yesterday. So if you go out of it for one day and come back in it, now you got a new range essentially. So we'll see what happens, tomorrow and the days after that, as far as that goes. But we are heading into, again, the best season of the year for the stock market, March and especially April. April's the best month of the year on an average basis going back over the long term. And so you got a lot of new money coming into the market, a lot of cash flow coming in. People are contributing to their IRAs and Roth IRAs and what have you too. So a lot of focus on money because of taxes. We're always really busy with new money coming in during this time of the year because, again, people are kind of looking at what they have as far as that goes. So uh, it's a wait and see scenario altogether still. Trying to guess what's going to happen, going forward is going to be very difficult. So just, look at how the market's responding. Certainly, obviously related to the tariffs. I mean, if you look day by day and even minute by minute on these charts, what's happening with the tariffs and the comments about the tariffs is what's really kind of driving the markets at the moment. And as I said yesterday, tariffs aren't a fundamental thing; they're a decision. And so, you got fundamental issues that happened like 2008, economic collapse. The decisions that are being made could cause an economic collapse, but we're not seeing evidence of that at all right at this point in time. And those decisions can be reversed. Again, unlike an economic catastrophe, you can't just reverse that all of a sudden. Trump could decide to not do tariffs. So, there is a piece of this that you've got to be a little bit aware of as far as that goes, and wait and see what's going to happen and how that plays out. We do keep getting these threats of tariffs, and we do have some tariffs now, but are they going to stay? All of a sudden we don't have tariffs on autos, which is a big one. I saw an article where they showed like a piston in a car engine transversing the Mexico Canada border 6 times. Well, so if you're going to get a tariff, each time it's going to really increase the cost. So that's probably part of the reason why they're looking at that. And it's a big industry with a lot of people working in it too. So we'll see again how this plays out. So anyway, that's what happened today. Good day to see the market come back. They did hint at some relief yesterday. Certainly, we saw that today. So the market did rally up on that. So who knows what's going to happen going forward? We'll look at tomorrow and see what goes on. But anyway, look forward to talking to you then. Thank you very much.